Welcome to the Mortgage Update with Dan Frio. For over 10 years, Dan has been helping AM 1160 listeners. With so many companies to choose from and hundreds of loan options, the mortgage process can be confusing and costly. Be sure to listen each day for Dan and learn the difference between FHA, VA, and conventional loans. You'll also learn how to negotiate lower interest rates and fees, as well as steps to buying your first home and whether refinancing makes sense. Stay tuned to find out why Chicago's top realtors are choosing Dan Frio.
Welcome to the Mortgage Update with Dan Frio, and I, of course, am Dan Frio. I've said it many times here on the Mortgage Update. The reason I present this show to you every week is to help people learn. That's what radio is, after all. There's no pretty anchor smiling at you. There's no flashy graphics at the bottom of the webpage. It's just my voice and the voice of my trusted guests, helping you understand things which aren't common knowledge, or worse yet, when the common knowledge is wrong. Those myths are such things as, Grandma will lose her house if she gets a reverse mortgage. Wrong. Or, Dad can give me money for my closing the week before I close. Wrong. Or, the free credit score I get from my credit card bill is my real credit score. And lastly, I'm facing an insurmountable climb toward owning a home. There's no way I can get there. Well, you're probably wrong. These are things which put people, especially first-time homebuyers, on the road to disaster. Real knowledge and the stuff most people either don't know about or think they do is the key to successfully and efficiently working your way through the home buying process. It doesn't have to be a nightmare, but it can be if you have incorrect information or if you're trying to do a one-click and done thing. I'm out to make it easier. I'm here to get you better equipped to handle every piece of the puzzle. Homeownership is a huge factor in sustaining strong communities, and we're talking about a huge piece of what can be the puzzle here today. The Illinois Housing Development Authority is joining me today to kind of go over all their programs to help you get into a home. What happens most of the time is when somebody's trying to qualify to purchase a home, there's two main areas that usually hinder them when they're looking to buy a home. Those areas are your credit and your money, or how much you have as a down payment, or I can say it this way, lack of. Last week, we went over your credit scores and more. Credit Scores and More is the website that I developed to help give you knowledge on your credit. It'll offer you free credit scoring systems and monitoring. It'll actually give you your credit report with all 30-plus credit scores on it that all lenders use if you're trying to get a car, a credit card, a mortgage, or even insurance. So now, today I want to talk about your down payment, or in many cases, lack of. Because a lot of people, especially in the Chicagoland area, rents are so high that it's really difficult to pay your bills, put food on the table, and also put money aside to buy a home. So today I have a special guest, John Maxim. He's from Illinois Housing Development Authority, also known as Ihda. If you're a realtor out there, you know Ihda. If you're a home buyer out there, you might have heard the program Ihda, I-H-D-A. You can look it up. It's developed by the state of Illinois to help people with the down payment, or again, lack of. These are grant programs, and the top program will give you up to $10,000 to use toward your down payment and your closing costs. So let me go through. Here's the numbers when you're looking to buy a house, and here's where a lot of people get kind of mistaken on, hey, I have enough to buy a home. So you see out there, and you even have on my show and my website, that we can help you buy a home with as little as 3% down. Okay, so let me go through the numbers simply with you. You're buying a $100,000 home. This is the simplest way for me to make it. You need 3% down. So your 3% down, 3% of $100,000 is $3,000. Okay, so you'd say, Dan, I got $3,000. I can buy a house now. Hold on. There's a lot more to this puzzle. Okay, so on the part of the mortgage, you might have approximately, let's say, $1,000 or $1,500 in costs for your mortgage. Okay, so that's $1,000 extra. So let's put that down, $1,000. You're going to need about $400 for your appraisal. you're going to need an attorney. You don't legally have to. I would strongly suggest you get one. And in my 30 years of doing this, I think I've only done one closing where the person did not have an attorney. So your attorney's going to probably cost you about $500. Now, if you ever watch some of my YouTube channels or videos, you see that when I talk about these things, I also say you need legal stuff. Such as, and I won't go through it in great detail, but you need title insurance, and that ensures to you and to me, the lender, that we have clear title to your property. I'll leave it at that, just to make it simple. So you're going to have title charges and a closing fee of probably about $3,000 or $4,000. Okay, so let's add this up. We need $3,000 for your down payment. We need another $1,000 for your lender fees. We need $400 for your appraisal. $500 attorney, $3,000 for your legal fees. So that's $4,900 of that plus the $3,000 down. Now you need $7,900. A far cry from the $3,000 you have in the bank, and you said, Dan, I can buy this house. I got $3,500. I got $500 more than is really required for me as a down payment. Okay, well, now when we add all this stuff up, you need almost $8,000. You don't have it. Now what? And most people just go back to the drawing board. They go back to renting, and just it's insanity. You keep chasing your tail around and around and around, trying to save the money up to buy a house. Well, I got a solution for you. It's the Ihda program, and it's a grant program developed by the state of Illinois to help you fill that gap. The programs go up to a $10,000 grant. The standard one that we usually use is about $7,500 in grant money. So let's break this down. We needed the $3,000 plus the $4,900 in closing costs and your title fees and your legal fees. That brought us to $7,900. Okay, well, if we can get you a grant for $7,500, now you have more than enough to buy the property. So today I have a special guest, John Maxim. No, he's not with Maxim Magazine. John is with the Illinois Housing Development Authority. Why I asked John on today is there's normally two reasons why I can't help somebody when and if they're looking to buy a home. The first is credit. So we talk about that a lot on this show, and I created the website creditscoresandmore.com to basically inform you and get all the tools you need to pull your credit and work on your credit to get it up to where we need it to be. So now the next part of this equation is your down payment or lack of. So many people, especially in the Chicagoland area, it's tough. It's tough to save money when you're paying rent, you're paying for a car, you have food, you have utilities, you have a student loan or 12 of them. It's hard to come up with a down payment. So I asked John in today. Again, he's with the Illinois Housing Development Authority, also known as, we call it in the business, Ihda. And Ihda is a program that is a grant program through the state of Illinois to help you with your down payment. So welcome, John.
Thank you very much, Dan. Thanks for having me.
Tell us a little bit about yourself. And then I want to really dig into this Ihda program because so many people call me that they have, $2-3 grand, and many times they think that's enough, and it's not enough.
Actually, Dan, we can talk more about it, but they can get in a house for as little as that.
Got it.
Ihda's been around, like you said, it's for Illinois Housing Development Authority. We've been around over 50 years. Our programs help about 6,000 people per year, and that works out to about 1 in 10 first-time homebuyers in Illinois have used our program to help them buy a house.
Got it.
So we take our source funding from federal sources. We're a quasi-state agency, meaning our bond rating is independent of the state of Illinois. We will raise bonds with our bond rating and develop programs also. So we'll take various sources of funding. We'll raise our own bonds, develop programs to help home buyers, both first-time and non-first time.
Got it. Cool. It's surprising to find out that there's only 6,000 people a year using this program.
It works out to, like I said, about 1 in 10 first-time home buyers, the numbers. I think the issue we run into is we're a very small organization. Our marketing piece is the lenders, such as yourself. So you guys are reaching out to the customers, telling them. The realtors are reaching out to the customers. And this is a great opportunity, thank you for having me on, to speak about the program, to let more people know about it. Because you mentioned they have $2,000. They don't think they can get in the house.
Right.
With our program, a lot of times if the numbers work out, they can get in the house as little as 1% of the purchase price.
Yeah, I was a broker for the last 12 years of my career. Now I'm with a company, Parkside Lending, who, thank goodness, we're a partner with you guys. We're an approved lender that offers this Ihda program. And I want to get the word out because 1 out of 10 people using this program is crazy. I mean, a lot of times, and we're going to go over all the segments or all the pieces of the puzzle that you have or programs that you have. There's some that you have to pay back. And then there's some that's basically free money. So if you can go down this route, if you don't have the money saved for the down payment, it's a great way to go. So let me ask you, I'm just going to go through some kind of bullet points. I've done this for 30 years. I've never done an Ihda loan.
Okay.
I've never been with an entity that was approved through you guys to offer this. So I'm excited to even be able to offer this to the listeners and everybody on YouTube and everything else. Let me ask you a question, because this airs in 3 states. Indiana, Illinois, Wisconsin. And then I also podcast it and do it through YouTube. You might not know the answer. Do most states have a program such as this? Do you know?
Yes, they do.
Okay.
I know Wisconsin, I believe they're called Ihda.
Yeah.
And then Indiana, I don't know the name of the organization, but almost every state has down payment assistance programs.
Okay, got it. So please don't go away. We will be right back with John and talk about the Ihda programs that might best suit you. Take care. God bless. We'll be right back. Welcome back to the Mortgage Update with Dan Frio, and I, of course, am Dan Frio. Got a special guest here with me today, John Maxim from Illinois Housing Development Authority, also known as Ihda. So, do you help? Is it mostly a first-time homebuyer program that you're helping people with? Or is it, can this be your second home, your third home, you're moving up? Does it have to be a first-time homebuyer?
That is a great question. I've been at Ihda 6 years. In various roles, account manager for a little over 3 years now. And when I first started, it was all first-time home buyers.
Okay.
So in the last few years, we have programs for both first-time and non-first-time home buyers.
Okay.
We have programs you can actually own a house now, keep it as an investment, buy a new principal residence, meaning you have to reside in it, and keep the current one as an investment. So we have programs for that also.
And there's a program for the down payment assistance on that next home.
Correct.
Really? Okay. So I'm going to drill down. These are things coming off the top of my head. And if you can think of questions like your most frequently asked questions, pop them in there. So you can buy a second home or a move-up home with that. Does the house have to be single-family home? Can you buy a 2-unit, 3-unit, 4-unit?
So our programs you can use for a single-family house, which is a traditional house, a condo, a townhouse, and up to a 2-unit property. Okay. So anything above 2 units you can't do. But if you want to buy a 2-unit and reside in 1 unit and rent out the other unit as a, income producing property, you can do that. Okay.
So we have somebody that's looking to buy a house. They have $2,000 in the bank. They're buying a $200,000 home. They don't have enough money. Walk me through the process. So they call me, we get them pre-approved through the Ihda program, but on their side of the fence, what do they have to know, or what's their criteria or qualifications to even be considered for the program?
Sure, I can go over a few things. Our programs are for low to moderate income households. Low to moderate, it's the full household income, but if you take Cook County, Will, DuPage, which are obviously in Illinois, the household income limit's maxed at $106,920. That's $106,920.
I wouldn't consider that low.
Yes, it's low
That's a
to
great
moderate.
income. Okay,
low to moderate.
Got it.
If you go out to a little outer area such as DeKalb County, it's $98,160. So it's low to moderate income.
So it's still $100,000 a year, and you can still get assistance.
Correct.
In general, in basic.
Correct.
Okay, sweet. Now let's get through it. So now we know the income limitations. We know we can only buy up to a 2-unit building, which is, I don't mean only, but that's great. Because most people, they're looking to buy their first home. It's a single family condo, townhouse, or whatever. So that fits. Now, the other qualifications. Let's go over like credit score, rent history, job histories. So let's just piece that together. Credit scores, because that's a big, again, when I usually can't help somebody, it's a credit score and a combination of the down payment. So credit scores, do they have to be fantastic, good? Where are we there?
I say you have to be moderate because we require a 640 credit score.
Okay.
And, I know you didn't segment on credit scores just recently, and you talked about credit scores, but you have to have at least a 640 to do our program.
Got it. Okay, so we know we can buy up to a 2-unit property. We need a 640 credit score, and we can make up to an average of about $100,000.
Correct. And that is, just remember, Dan, that is household income. So that would include not just your borrower, but it would include the borrower's spouse and anybody 18 or over in the household.
So let me throw this curveball at you. Mr. makes $75,000 a year and has a 700 credit score. Mrs., they're recently married. She makes $25,000 and has a 580 credit score. Can we do it under Mr. only?
Yes, you can.
Okay.
So our program is done through you, the lender. What's nice about our programs, they do not apply directly through us.
Okay.
They would come to you and your team, Dan. You would handle everything step by step. We don't even see the loan. You actually front the money as a lender, and then you get reimbursed from us. So the customer does not, or your borrower does not wait any longer just because they're getting our assistance.
Sweet. Again, let's recap this whole section. You can buy up to a 2-unit property. You need a 640 credit score. Be one of you in a combination. I'll help you with that piece of the puzzle. You can make up to $100,000 on average, and it doesn't have to be your first time home buyer out there. And that clarifies a lot of things. So in the next segment, here's what I want to go over. I know I only thought that Ihda had one, maybe two different options to choose from. As I'm finding out more and more and more, I know 4, if not more. So if you can kind of lay out all the options people have and why somebody would go with option A versus option B and so forth. John, if somebody wants to find out more about Ihda, hopefully they call me. And I'm going to add this to my website, so you can go into the system and look up, like I have Homes for Heroes, all your purchase options, refinance options, and everything. I'm going to put an Ihda specific section on there. Maybe you can even help me with that. But what should somebody do? They have $2,000 or $3,000 or nothing. What would you say? What's the best option for them to start their progress or start moving forward to home ownership? And also, give us the website where they can go to, because I know it. And I went there, and it's actually an awesome website. So walk us through, what would you do if you're a first-time home buyer and you have $1,000 in the bank, but you really need to get out of the place that you're renting and get into your own place?
Sure. Thank you for asking, Dan. Our website is I as in Illinois, H as in house, D as in dog, A as in apple, mortgage, mortgage.org. And once again, that's IHDAmortgage.org. You can go there, see the program, see what we have to offer, but probably everything, like I mentioned earlier, is done through you, the lender.
Okay.
So if they give your team a call, you're going to pull credit so you can see that if they qualify or not. You're going to ask them about their income to make sure they're not over our income limits. You're going to ask about the type of property they're buying, and it's literally that simple. You guys are going to qualify them for the assistance.
Got it. And we do know all the programs now, because I've been educated on this for the last month. But I wanted John to come in here because I've done this for 30 years. I don't know the programs. I knew one existed. There was a down payment assistance through the state of Illinois, but really didn't have a clue on all the stuff you guys have to offer. I guess I'm going to throw it at you, and you take the stage from here. Why are there so many options? Because it seems like, okay, I'm short money to close. I need $5,000-$6,000. You should maybe have an option of you can get $5,000 or $7,000 or whatever, and that's it. Why is there? I know of now 4. There might even be more. But can you break down the different programs for us?
Absolutely, Dan. Let's talk about, I mentioned earlier we have funding sources from different places, all right? And we develop different programs for different qualifications. Programs I'm going to talk about, and one is funded by the U.S. Treasury.
Okay.
From hardest hit funds. It's used to help hardest hit communities. So we have a program that's called First Home Illinois. It is available in Cook County, It's available in Winnebago, which is like your Rockford area. It's available in St. Clair County, and it's available in Marion County.
Okay.
The reason those counties were chosen is because they're above the state average in 4 to 5 housing distress indicators.
Okay.
So they're a little more hardest hit communities. Okay. The First Home Illinois, you do have to be a first-time home buyer.
All right.
First-time home buyer is someone who hasn't owned in the past 3 years. So say during the downturn in the economy, you owned a house and you lost it, you sold it or whatever, you haven't owned a house in 3 years, you are your spouse, you are defined as a first-time home buyer. So you can take advantage of this program.
So it doesn't have to be specifically it's your first home ever.
Correct.
Okay.
Correct. In the past 3 years. Also, if you are a veteran, you're exempt from that first-time home buyer requirement. So a veteran could actually own a house now, or any of our programs that say first-time home buyer, they are exempt from that requirement.
Really?
Yes, absolutely.
Okay.
Something we do for them. So the First Home Illinois, like I said, first-time home buyers, unless you're exempt, it's in those 4 counties. It's Cook, Winnebago, St. Clair, and Marion.
Okay. What
it does is you're going to give them a mortgage, and you talk about mortgages all day long. You're going to give them a mortgage, USDA, FHA, VA, are conventional, and we're going to give them $7,500. That's a flat $7,500 to help with your down payment and our closing costs. So we could talk numbers all day, Dan, but to make it simple, say they're buying a $100,000 house.
Yep.
And how much you need on FHA to put down?
3.5%, $3,500.
$3,500. We're going to give them $7,500. Okay. Cool. So we're going to give them $7,500 to help towards that down payment. That would leave additional $4,000 to help with the closing cost. Maybe they got a seller credit, right? Mm-hmm. So they have all this pile of money along with their $7,500. If that's the way it works out, we require that 1% or $1,000, whichever is more into the deal, and they can walk into the deal. And actually, with that scenario, they could walk out with $250.
Sheesh. Pretty cool. Which one was that?
That's First Home Illinois.
Okay.
Yes.
Got it. I didn't know about that program. So that's new to me. So awesome.
Yes. And that's a specialty program. Like I said, it's funded by the U.S. Treasury, hardest hit funds.
Cool.
The Access programs are actually funded by us. We raise bonds with our bond rating, and we develop programs to help different types of scenarios.
All right, so we're up against the clock. Thanks a lot for tuning in today. We'll be back same time, same place. God bless.
You've been listening to The Mortgage Update with Dan Frio. For over 10 years, Dan has been helping AM 1160 listeners. With so many companies to choose from and hundreds of loan options, the mortgage process can be confusing and costly. Be sure to listen each day for Dan and learn the difference between FHA, VA, and conventional loans. You'll also learn how to negotiate lower interest rates and fees, as well as steps to buying your first home and whether refinancing makes sense.